Welcome to the deep dive. Today we're diving into these UK investment trusts, and wow, things are getting kind of heated over there right now. We've got all this great material you've sent us, and it looks like there's this battle brewing, kind of like this 150-year-old system going head-to-head with a U.S. hedge fund that wants to, well, shake things up.
Yeah, it's a real showdown. On one side, you've got these UK investment trusts that have been around forever. Like they're known for taking this slow and steady approach. And a lot of them are really focused on making sure investors get a good income stream.
Okay, so before we get into all the drama,
Yeah.
can we just take a step back for a second? And help our listeners understand what exactly makes these UK investment trusts so different?
Yep.
We've got mutual funds here in the U.S., right? So what's the big distinction?
You've hit a key point there. While both investment trusts and mutual funds pool money from investors, UK trusts have a unique feature. They're listed on the stock exchange. This means their shares can trade at a discount or premium to the actual value of their holdings. So you can think of it like buying a house for less than it's worth, or, on the flip side, getting caught in a bidding war and paying way more.
So that's where Saba Capital comes in, right?
Mm-hmm.
They're going after these trusts that are trading at a discount, hoping to capitalize on that price difference. It's like they're trying to find those hidden gem houses that everyone else is overlooking.
Exactly. Saba says they're trying to unlock value trapped in these discounted trusts, but Frostrow Capital, whose analysis we're looking at today, isn't buying it. They're warning everyone about Saba's motives.
It sounds like Frostrow thinks Saba might be more interested in flipping those bargain houses for a quick profit,
Yeah.
instead of actually improving them. So let's get into their concerns. What exactly has Saba been doing that's causing such a stir?
Well, they've been buying up shares in these discounted trusts, enough to give them some serious voting power. Their plan is to take control, give some cash back to the shareholders, and then manage the rest of the funds their way, which basically means buying up even more discounted trusts.
So it's like they're buying up a whole neighborhood of undervalued houses and trying to create a property empire. But Frostrow's worried that this could really mess things up for businesses and those everyday investors.
Right. Frostrow's argument is that Saba's tactics could destabilize these businesses, which would hurt their performance in the long run and the returns for investors. And they're especially concerned about how secretive Saba is being about their long-term plans.
It's like they're promising to renovate those bargain houses, but won't show anyone the blueprints. Anyone would be nervous about that. It's a classic clash between wanting quick wins versus stability in the long run.
Exactly. And Frostrow is urging everyone, institutions and everyday investors alike, to vote in these upcoming shareholder meetings. They're saying every share matters, even if you only have a few.
It's like a neighborhood watch. They're saying, hey, everyone, be careful and protect yourselves. They're basically saying if shareholders don't speak up, Saba might just get away with it.
Absolutely. Frostrow believes that if not enough shareholders vote, Saba could take over and completely reshape the UK investment scene.
So the stakes are really high here. This isn't just about some investment trust. It's about who holds the power in the UK financial market.
Exactly. And it makes you wonder what kind of ripple effect Saba's actions could have on the UK financial landscape in general. It's worth noting that lately, companies have been choosing to delist from the London Stock Exchange and list elsewhere.
So London's losing its shine as a financial hub. What's behind that?
There are a few things going on, like changes in regulations, the whole Brexit situation, and competition from other exchanges. Some companies feel like they'll get a better deal or attract more investors by listing in the US or somewhere else.
And how does Saba fit into all of this? Are they making this trend worse?
That's what Frostrow is worried about. They think Saba could speed up this trend. If Saba takes over these 7 trusts, and we're talking about Herald Investment Trust, Edinburgh Worldwide Investment Trust, Baillie Gifford U.S. Growth Trust, Keystone Positive Change, CQS Natural Resources Growth and Income, European Smaller Companies Trust, and Henderson Opportunities Trust, it might send a message that the UK market is an easy target for activist investors.
Like a domino effect, one falls and the rest follow. If Saba wins, it could make other companies nervous about their future in the UK.
You got it. We've already seen this happen with companies like DG Innovate, a software company, and Aspen Insurance. Both of them decided to ditch the London Stock Exchange.
Wow, so this is way bigger than just these 7 investment trusts. We're talking about the future of the London Stock Exchange and the UK's place as a global financial player.
Exactly. And that's what makes this whole thing so interesting and maybe a little scary. It shows how much power investors have, big and small, and how their choices can have a huge impact on the whole financial system.
This is big stuff we're talking about here. There's not just about these individual trusts, but the whole UK financial system is on edge. But before we go too far, Let's talk about this Boaz Weinstein guy, the mastermind behind Saba Capital. He's pretty interesting, right?
Oh, absolutely. Boaz Weinstein's been around in the finance world for a while. He started out at Deutsche Bank and worked his way up to head of global credit trading. Then he went on to co-found Saba Capital, which got a reputation pretty quickly for its, hands-on approach to investing, especially when it comes to these closed-end funds like those UK investment trusts.
Sounds like he's not afraid to shake things up.
Yeah.
But what's his track record like? Has this activist investing style worked out for him in the past?
Well, it's kind of a mixed bag. Like most investors, he's had his ups and downs. He had some big wins, especially after the 2008 financial crisis. He made some pretty gutsy bets against those mortgage-backed securities, and he's gone head-to-head with some heavy hitters in the hedge fund world. Like, remember that whole London whale debacle with JP Morgan Chase?
Oh, yeah, that was huge. So he's taken on the giants of Wall Street and won. I'm guessing he hasn't always come out on top, though, right?
Of course not. He's had losses, too, like anyone else, especially recently with some of Saba's credit-focused strategies. But he's known for bouncing back, learning from his mistakes, and changing his approach. He definitely doesn't give up easily.
Sounds like he's playing financial chess, always thinking a few steps ahead. How does that translate to his strategy with these UK investment trusts, though? What's his ultimate goal here, do you think?
Well, if you look at what he's done in the past and what he's saying publicly, it seems like he sees these UK trusts as golden opportunities. He thinks they're undervalued and that he can unlock that value by changing how they're managed and how they invest.
But that's where Frostrow's worried, right? They think his intentions aren't so pure. They're saying he's probably more focused on making a quick buck than creating long-term value.
That's it. It comes down to this basic question: is Weinstein a real reformer trying to make these trusts better for everyone? Or is he just taking advantage of the situation to grab some profits for himself and his investors?
It's a classic case of he said, she said. It's like a courtroom battle. You've got both sides telling their story, and it's up to the jury, the investors in this case, to decide who to believe.
Perfect analogy. And that's why it's so important to look past all the talk and really dig into the facts. What does Weinstein's history really tell us? What exactly is he proposing for these trusts? And how will his actions affect the shareholders in the long run?
So it's all about doing your homework. Weigh the risks and rewards and then make a smart decision. But there's more to it than just the numbers, right? There's an ethical side of this too. Is it right for a U.S. hedge fund to come in and potentially disrupt these established UK institutions?
Yeah, that's a good point. It brings up questions about how companies are governed, the rights of shareholders, and the role of activist investors in the market. Some say activist investors are a good thing. They push companies to perform better and listen to their shareholders, but others worry that they're too focused on short-term gains and can end up hurting businesses in the process.
So there are valid arguments on both sides. It's complicated and there's no easy answer. But for the average investor who's stuck in the middle of all this, what can they do to protect themselves?
The most important thing is to vote. As Frostrow keeps saying, every vote matters, especially when you've got a hedge fund like Saba trying to take control.
So don't just sit back and watch this show. Get in there and make your voice heard.
Yeah.
But for someone who's never been to a shareholder meeting, how does that even work? Does it sound kind of scary?
Not at all. It's pretty simple. Your broker or the company itself will tell you how to vote. You can usually do it online or by mail. That only takes a few minutes.
Okay, so voting is the first step.
Yeah.
What else can investors do to be proactive here?
Remember, knowledge is power. You have to do your research, understand both sides of the story, and form your own opinion. Don't just blindly follow what one side or the other is saying.
Don't just take Frostrow or Saba's word for it. Look at the facts, read the reports, and come to your own conclusions.
Exactly. Take a close look at Saba's track record, their investment strategy, and what they're specifically proposing for these trusts. Weigh the pros and cons of them getting involved, both for the individual trusts and the whole UK market. Think about the long-term implications of them potentially taking control and how that lines up with your own investment goals.
So it's about looking at the big picture, not just the immediate financial impact, but also how it affects the companies, the investors, and the whole UK financial system.
Exactly. You have to be an informed and engaged investor, not just someone along for the ride. This whole situation shows how important it is to understand the forces that shape the financial world and how they affect us directly and indirectly.
This has been a really fascinating deep dive so far. We've uncovered a lot of complex strategies, competing interests, and potential consequences. But before we wrap up, I want to get your thoughts on one last question. So we've been talking about how this is all going down in the UK, but I'm curious, how do you think things would play out in the US? I mean, activist investors are pretty common here. Could this whole Saba thing be like a preview of what's to come in the U.S. market?
It's a good question, and I think it's worth thinking about. The U.S. market's been dealing with activist investors for a long time. Some are more aggressive than others, but I think the environment here might be a little more open to Saba's approach. You know what I mean?
So are you saying that U.S. companies might be more used to these activist tactics? Would that make them more likely to give in to Saba's demands? Or will they fight back even harder?
That's tough to say. U.S. companies have their own ways of handling activist investors. Some might be more willing to negotiate, but others might be ready to put up a fight, especially if they think the activists' ideas aren't good for the company or its shareholders in the long run.
So it's a whole different ballgame with different rules and expectations. But I guess the big question's still the same. Where's the line between being an activist investor and just being disruptive? When does pushing for change go too far?
Yeah, that's the million-dollar question, and there's no easy answer. It depends on a lot of things, like the specifics of the company, the activist investor's track record, and what the shareholders want in the long run. What really matters is that investors understand what these activist campaigns can do, both good and bad, and then they got to make smart choices that fit with their own investing style and how much risk they're willing to take.
It sounds like you really need to think critically and do your homework when it comes to activist investing. It's not just about following the trends or getting caught up in the excitement. You really have to understand the details, weigh the evidence, and make your own decisions.
Definitely. It's about being an active investor, not just sitting back and watching. You got to know your rights, do your research, and be part of the process. And sometimes it means being brave enough to challenge the way things are done and fight for what you think is right, even if it means going up against a big Wall Street firm.
I like that. I think it's a great point to wrap things up on. This deep dive into UK investment trusts and activist investing has been really eye-opening. We've seen some interesting things at play here and talked about some important questions that all investors should be thinking about no matter where they're investing or what their goals are.
It's been great talking about this with you. Hopefully, our listeners have a better idea now of what's happening in the financial world and how they can be a part of shaping it.
For sure. And as always, we want to encourage our listeners to keep learning, researching, and engaging with the world of investing. Because like we've seen today, knowledge is power. And when investors are informed, they're empowered.
Thanks for joining us on the Deep Dive.